Gold up 28. Right? What I thought Bitcoin was supposed to be the fastest horse in the race, right? That's what who said that? That was Paul Tudor Jones, right? Oh, I'm buying Bitcoin. It's going to be the fastest horse in the race. Well, it's gold's got a nice lead this year on Bitcoin. In fact, I think they're sending Bitcoin back to the stable. In fact, eventually they're sending Bitcoin to the glue factory. But look at the gold and silver mining stocks. The GDX and the GDXJ were up 3.33% on the week. And the GDX and the GDXJ closed the week on new multi-year highs. I mean, maybe 12, 13-year highs. Year to date, the GDX is up 77.5%. And the GDXJ is up 78.5%. Those are huge returns. And we're not even at the halfway mark for the third quarter. And we got those kind of returns. Gold had a great day on Friday. So did silver. They didn't hit new highs. Silver closed just below $39 an ounce. Gold was about maybe $33.70 or so not quite above $3,400. But the rotation that we've had, with foreign central banks out of dollars and out of treasuries into gold is going to accelerate as a result of this shift in Fed policy, right? Central banks are going to be more interested and more aggressive in their movement out of U.S. dollars because the Fed has basically said, we are going to sacrifice the inflation side of the mandate because of the political pressure put on us by the Trump administration, which is still early days. We still got, 3.5 years left of Trump, and wait till Trump, gets complete control of the Fed. Wait till Powell is gone and some flunky has taken his place and they get some more FOMC members, right? He's going to completely have control of the Fed. And that means get rid of your dollars. That means buy gold. And again, it's not just central banks that should be doing that. Everybody should be doing that, right? Individuals should be doing that. They're not doing it yet. Again, I talk about the fact that at Schiff Gold, it's not like our phones are ringing off the hook. They should be, right? People should be calling in droves. We probably, we still get more people, I think, selling their gold and silver. They think they're getting a good price. They're getting a lousy price. Gold and silver prices are just going to keep going up. Why? Because the dollar is just going to keep going down. Powell just told you that.
The Federal Reserve faces a crossroads. By cutting rates despite stubborn inflation, it signals a willingness to erode the dollar to support government borrowing and the housing market. Long-term yields remain elevated, pressuring Washington to push the Fed toward quantitative easing once again. This means direct purchases of Treasuries and potentially mortgage-backed securities, artificially suppressing rates. While such policies may provide short-term relief, they weaken the dollar's credibility. For global central banks, the message is clear: reduce exposure to U.S. debt and accumulate hard assets. This trend is accelerating under the Trump administration's growing influence over Fed leadership.
Right? We're going to sacrifice the dollar. We don't care, right? We're cutting rates, even though inflation is above target. But more importantly, they're going to go to QE because what is going to happen? They're going to cut rates and long rates are going to go up. Then what? Because they want long rates to go down. That's the main goal. They want to get long-term interest rates down so the government, they think, can refinance the national debt at lower rates. They want to goose the housing market, right? Instead of doing the right thing by letting home prices go down, they want mortgage rates to go down so people can overpay for these homes. But when mortgage rates don't go down, then they're going to still want the Fed to bring them down. And how are they going to do that? Quantitative easing, where the Fed goes into the market and buys treasuries, or maybe starts buying the mortgage-backed securities again. They haven't been buying them at all. They've just been buying treasuries. In fact, they've been selling mortgage-backed securities as part of quantitative tightening. So obviously that's going to come to an end. I mean, that may come to an end in September. But there's going to be a lot of pressure on the Fed to resume quantitative easing in order to bring interest rates down. And that is going to bring the dollar way down. And you got to prepare for that. Look what happened to gold prices. Again, gold up. Gold is up 28% this year. It's a nice move, right? The year's not over yet. We're up 28% in the price of gold. Now, Bitcoin got all the headlines in 2025. That's all the financial community could talk about. Bitcoin is barely up. In fact, it's not even up 22% year to date. In fact, it was up 22% when I first started the podcast, but now it's dropped about $1,000. When I started doing this podcast about 40 minutes ago, and I looked at Bitcoin, it was 113,500, and it wasn't up 22% on the year. Now we're down 1,000. So Bitcoin isn't even up 21% now. It's at 112,500. So Bitcoin up 21% on the year.
For much of the financial media, Bitcoin has dominated headlines. Yet in 2025, gold has been the stronger performer, up roughly 28% year to date compared to Bitcoin's 21%. While Bitcoin remains volatile, gold's steady climb demonstrates resilience in an environment of weakening fiat currencies. Investors once hailed Bitcoin as the fastest horse, but this year's data tells a different story. Gold is outperforming, quietly reclaiming its role as a store of value. For those searching for stability in an era of debt and political uncertainty, the metal's consistent gains are speaking louder than digital hype.
Gold up 28. Right? What? I thought Bitcoin was supposed to be the fastest horse in the race, right? That's what, who said that? That was Paul Tudor Jones, right? Oh, I'm buying Bitcoin. It's going to be the fastest horse in the race. Well, it's, gold's got a nice lead this year on Bitcoin. In fact, I think they're sending Bitcoin back to the stable. In fact, eventually they're sending Bitcoin to the glue factory. But look at the gold and silver mining stocks. The GDX and the GDXJ were up 3 1/3% on the week. And the GDX and the GDXJ closed the week on new multi-year highs. I mean, maybe 12, 13-year highs. Year to date, the GDX is up 77.5%, and the GDXJ is up 78.5%. Those are huge returns. And, we're not even at the halfway mark for the third quarter, and we got those kind of returns. These gold stocks are on pace to more than double as a group in 2025. I said this when Donald Trump proclaimed that America was on the cusp or beginning, whatever, a new golden age. I said he means that literally. It's going to be a golden age for gold. And so far, gold is shining bright in the Trump presidency. But what's shining even brighter are the gold and silver mining stocks. So while everybody wanted to buy fool's gold and Bitcoin-related stocks, had they just bought gold stocks instead, they'd have made a lot more money.
Beneath the spotlight of precious metals lies a booming, underreported story: mining stocks. Major indices like GDX and GDXJ have climbed over 75% this year, hitting multi-year highs. This sector is outperforming every other corner of the U.S. market, yet receives little attention from mainstream media. While television pundits obsess over Bitcoin or tech, gold and silver miners have quietly delivered triple-digit returns for early investors. Despite these explosive moves, valuations remain historically cheap, suggesting the rally is still in its early stages. For patient investors, this overlooked sector offers one of the most compelling opportunities of the decade.
And in fact, even though gold and silver mining stocks are the best performing sector of the market, right? By far, there's not another sector that comes anywhere close, right? Precious metals mining stocks, hands down, the best performing group in the U.S. Why do they get no coverage? Turn on CNBC, turn on Fox Business. They don't talk about these stocks. I mean, maybe you get to Fast Money on CNBC and somebody will say, yeah, I like Barrick Gold. I like the GDX. Okay. Yeah, someone will mention that like as a pick. But they really don't focus on it. Instead, they spend so much coverage on Bitcoin, right? And MicroStrategy. You're much better off on the gold stocks this year than MicroStrategy. I mean, not even close. So this is a stealth bull market. No one is talking about it. The financial community isn't covering the story. You have the best performing sector in the market, and it's not even worthy of coverage as far as the media is concerned. They're missing the boat. People who rely on financial news are missing the boat, right? If you're watching my podcast, if you're relying on the Peter Schiff show, then hopefully you're not. Hopefully you're following my advice and you're buying gold and silver, and more particularly, you're buying the mining stocks, because even though they're up 78% on the year, they're still cheap. That's how cheap they were before they went up. So there's plenty of time to buy these things.
The rise in precious metals and related equities represents more than a short-term spike. It's a structural shift. Global capital is moving away from overvalued U.S. assets and toward commodities, value stocks, and foreign markets. This silent rotation is still largely ignored by financial media, echoing past cycles where investors missed generational opportunities. History shows that mainstream coverage often lags reality. Bitcoin only gained recognition after years of massive gains. Gold appears to be following a similar path today. By the time headlines acknowledge this bull market, much of the upside could already be gone for latecomers.
And the fact that the media hasn't even noticed it yet, that shows you how early we are. I mean, when did the media start talking about Bitcoin? Think about how much Bitcoin went up before CNBC finally jumped on the bandwagon, right? I mean, and so imagine where gold's going to have to be before we get a bunch of believers there, right? So we got a long time, so you got to buy your gold. Remember, the symbol on my gold fund is EPGIX. And the reason I think my gold fund is the one to buy, and of course, obviously I'm biased because I make money if you buy my gold fund, right? I don't make any money if you buy somebody else's. So obviously, I'm biased. But what I like about it, other than the fact that Adrian Day manages it, and I think Adrian forgot more about the mining industry than all these other managers know, probably combined, right? You don't have the brightest people, managing these gold portfolios because they're all managing tech and something like that that's exciting and makes money for the investment bankers, right? You got the dunces that are assigned metals and mining, right? It's like, nobody wants to draw that straw. But Adrian, lives and breathes this stuff. I mean, he's in mining because he wants to be there, not because, he was the worst. He had the lowest scores in his class, and he got, delegated to the job nobody wanted. But we've got all these small stocks, positions in these small stocks. It's the bigger stocks, and even the junior stocks, like in the GDXJ, are larger than a lot of the small stocks that we own. And so because we have this allocation of these small stocks, it's a drag on performance now. But once those things start to move, I think it's going to be like lightning speed. I think they're going to have such a big move that it will dwarf the moves in the big stocks. And that's when it's going to kick in.
Evidence of a broader financial reset is mounting. Foreign investors are shifting capital into local markets, dividend-paying equities, and hard assets. Funds heavy in defensive sectors, utilities, consumer staples, and telecom are posting gains far outpacing the S&P 500. This marks the early phase of a decade-long rotation away from U.S. dominance. Gold, silver, and global value stocks stand to benefit as capital diversifies. The trend is still underappreciated, with offering investors a rare chance to position early. With mounting debt, inflationary policies, and political pressure weighing on the dollar, the message is clear. The new golden age has begun.
So we've got that jet fuel for our portfolio, and we're just ready to go. And so I think now you want to take advantage of that because it's very hard to buy these positions now. There's no liquidity there. And so I think ultimately we're going to have an even bigger move, and we're going to way outperform the indexes that just have the bigger companies, even though we've underperformed. But I think, we're still up maybe 65%. I forget the exact amount year to date. That's still not too shabby, because we do have a lot of the big stocks as well. But, it's not just the gold stocks that are killing it. Look at my dividend payer fund, Europe Pacific Dividend Payers Fund, EPDPX, no, EPDIX, Europe Pacific Dividend Payers, up almost 39% on the year. Those are just dividend paying foreign stocks. Yeah, we got a few gold stocks thrown in there, which also pay dividends. But we have a lot of utilities in there, telecom, tobacco, consumer, non-discretionary, food and beverages. We have a lot of recession-resistant, defensive value stocks in the portfolio. Yet you've got almost 40% gain. That's literally like 10 times, not 10 times, 4 times the gain in the S&P 500. Who's talking about this? People are not really talking about foreign stocks. But this is part of the rotation. It's not just that foreign central banks are rotating out of the dollar and into gold. Foreign investors are rotating out of U.S. stocks back into their own stocks. And you can see that in my dividend payers fund. But this is early in this secular rotation. U.S. stocks outperformed for over a decade. Now I think they're going to underperform for over a decade. Yet nobody is covering this story, really. Every once in a while somebody mentions it, but you wouldn't know for watching financial news how foreign stocks are just absolutely killing the U.S. stock market.